So even though I'm not spending $16 million on this coin, I'm just spending a little teeny premium above spot, I'm in that category.
Gold is respected around the world for its value and rich history, which has been intertwined across cultures for thousands of years. Throughout the centuries, people have continued to hold gold for various reasons. Societies and now economies have valued gold, thus perpetuating its value. It's the metal we turn to when other forms of money don't work out, which means it still has some value as insurance against hard times. Unlike paper money, coins, or other assets, gold has retained its value over the centuries. People see gold as a way to pass on and preserve their wealth from one generation to the next. Since ancient times, people have appreciated the unique properties of the precious metal. Gold does not corrode and can be melted over a common flame, making it easy to work with and rub like a coin. Throughout history, gold has been considered a special and valuable commodity. Today, owning gold can act as a hedge against inflation and deflation, as well as a good way to diversify a portfolio. As a global store of value, gold can also provide a financial hedge in times of geopolitical and macroeconomic uncertainty. In today's video, we'll tell you why Lynette Zang believes only physical gold and silver are real assets and will make you rich. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. The money in this country is a Federal Reserve note. It's a debt instrument backed by the full faith and credit of the government. As long as you trust them and have faith, you will continue to lend them money. But if you go back to Sri Lanka, Venezuela, Argentina, Turkey, other countries, or Russia right now, they accumulated a lot of gold in anticipation of what they were going to do. Therefore, you're not at counterparty risk and are borderless. It's global money. It's good money. Furthermore, according to the Bank for International Settlements, gold remains in home runs, without political risk. The difference between GLD and spot gold grows more and more over time, even though they have the exact same movement, but it's because they sell part of their holdings. We will probably see confiscated gold again because all that wealth will have been taken from you during your lifetime, but they will stop at the end and you can keep it. They just need to be in the category where the top 1% have gold. Good diversification includes some durable assets, including hard assets, not stocks and bonds, ETFs, and mutual funds. They want you to think of it as diversification, but protect your assets with it. Because right now, they are rallying, but stocks are overvalued, gold is undervalued. It's going to flip. Therefore, this will ensure that you are able to maintain your primary diversification properly. We've been moving in a synchronized fashion really since 2008, 2009, and that's all money printing. So you have a reset that happens slowly, like inflation. By design, the monetary system incorporates inflation, and inflation actually resets the value of money on an ongoing basis. But the reboot that everyone is talking about and looking for is the overnight reboot, where they take a coin where all confidence in a coin is lost. For example, we see Zimbabwe again, which just came out with a gold coin, but we see it in several countries that are in hyperinflation, and that's when all confidence in the currency is lost and the government is trying to keep them under control. They then revalue or reset the currency, which has no intrinsic value and is only used in one place. The reset is for gold, which is good money. So you have your fiat currency, your New Zealand dollars, your US dollars, your yen, etc. And then you have good money, which is gold. Although the US dollar is one of the most important reserve currencies in the world, when the value of the dollar falls against other currencies, as it did between 1998 and 2008, it often leads people to seek the safety of gold, which makes to raise the price of gold. Prices. The price of gold almost tripled between 1998 and 2008, reaching the $1,000 per ounce mark in early 2008, and almost doubled between 2008 and 2012, surpassing the $2,000 mark. The US dollar's decline occurred for a number of reasons, including the country's large budget and trade deficits, and a sharp increase in the money supply. The key to diversification is finding investments that are not highly correlated with each other. Gold has always had a negative correlation with stocks and other financial instruments. The 1970s were great for gold, but terrible for stocks. But the 1980s and 1990s were great for stocks and terrible for gold. In 2008, stocks fell sharply as consumers migrated to gold. Gold retains its value, not only in times of financial uncertainty, but also in times of geopolitical uncertainty. It's often called the crisis commodity because people flee to their relative safety when global tensions arise. During these periods, it often outperforms other investments. For example, gold prices have seen significant price movements this year in response to the crisis in the European Union. Their price often rises higher when trust in gold is low. gold tends to get all the glory in the investment world. It's the benchmark people think of when they want an alternative investment to traditional stocks and bonds. But from time to time, the financial spotlight falls on silver and its price skyrockets, outperforming even its yellow metal cousin on the market. Silver may be a cheaper alternative to gold, but silver also comes with unique considerations and risks that investors should be aware of. Silver is classified as a commodity, a publicly traded tangible asset. The tangible asset prices generally move in the opposite direction of stocks and bonds. For this reason, many investors turn to commodities like silver when the stock market is looking poor or during times of economic downturn or political instability. Since it's affected by different influences, silver can be a good way to diversify and balance your portfolio. The metal also acts as a hedge against inflation. As a physical asset, it has an intrinsic value, unlike the dollar or other currencies. Silver retains its value over the long term and does well when interest rates are low. In this way, silver functions like gold as an investment, fulfilling a similar safe haven role. However, silver is an industrial metal as well as an investment metal, which greatly affects its price action and outlook. Silver is used in the manufacture of a variety of things, from dazzling jewelry to humble batteries, from medical equipment to microcircuits. It also is at the forefront of certain innovative fields. It is always possible that silver will be replaced by another metal in its manufacturing uses, or that something happens to the industry itself. Because silver has value in multiple categories, its price can swing wildly, caught in a tug of war between its industrial and investment valuations. As the price of silver increases, the incentive to recycle silver from industrial waste, jewelry, and silverware increases. It's natural to compare silver to gold as an investment. They share the same tangible assets, counterbalances to stocks and stock markets, shelters against socio-political shocks, hedges against inflation. However, the two precious metals have several important differences. Silver is cheaper than gold. Its spot price on the financial market has never exceeded $50 an ounce. Gold is trading in the 4 digits. Silver is therefore much more affordable. The same investment in dollars allows you to buy much more silver than gold. Gold should be an important part of a diversified investment portfolio because its price rises in response to events that cause the value of paper investments such as stocks and bonds to decline. Although the price of gold can be volatile in the short term, it has always held its value in the long term. Over the years, it has served as a hedge against inflation and erosion of major currencies and is therefore an investment worth considering.
Gold held at home runs no political risk. I mean, personally, because of what I do, I hold it in a private vault that I can walk to.
That's all for today. Let us know your views in the comments section below. And don't forget to like this video before leaving. Thanks for watching.